Hello, everyone. This is Justin Smythe from NextBigTrade.com. This is your focus watch list for April 5th, 2024. On the focus watch list this week are ETFs that benefit from volatility in the stock market and some inverse ETFs that could benefit from stock market downside. With the stock market having better potential to roll over lower, there's some big volume coming into these ETFs, and although they've failed to follow through higher so far over the last month, they're showing big accumulation that could indicate the market's preparing for more downside here. So starting off with UVXY, which plays the VIX to the upside. This ETF had its second largest weekly upside volume ever this week. And this one's basically been bumping up against the 10-week moving average now for the past 5 or 6 weeks. The VIX has just been unable to break out to the upside, which is why the stock market has continued higher. But we're definitely set up here to follow through higher if the market moves lower next week. And on the daily chart, you can see last week there was a cluster of 3 days of big buying pressure coming into this ETF with little downside selling pressure last week. So overall, a nice kind of setup here. You've got a little bit of a basing pattern. And again, these are ETFs to play for sharp moves lower during stock market corrections. They're not long-term vehicles by any means, but they're good ways to take a trade that works against the stock market, especially early in a new stock market correction. So potential for a breakout here in UVXY heading into next week. And then looking at these inverse ETFs, starting off with the Russell 2000 inverse ETF, TZA. This one traded its largest weekly upside volume in 2 years this week. Again, bumping up against the 10-week moving average. Here's the volume right here. And if we do get a breakout above this resistance level, that would, kind of trigger, a trade in this type of vehicle. You've got same type of thing with UVXY. You've got, resistance here over the last month or so. It doesn't have as good of accumulation volume as UVXY, but there's lots of relative weakness that's still showing up in these small cap stocks. Jumping down to the Dow, the DOG ETF is a way to play the Dow to the downside. The Dow had a big reversal lower this week, and you had the biggest volume we've seen in DOG come in since really 2023. And there's actually some, over the last, month and a half, again, there's lots of volume here, just no breakout. So DOG trading heavy volume again on the daily chart. It did start to break out above the 10-week moving average this week, but then pulled back at the end of the week. So you've got some good buying pressure, a little bit of a pullback, potential to set up a continued follow through higher next week. The final ETF is SQQQ. This one, with the strength in large cap tech, this one's been held down as well, but still set up right below resistance. Did take above average volume this week, and a lot of this volume came in on Thursday with the big sell-off in the stock market. However, on Friday, this one did take heavy selling pressure with the market moving back higher. So this one is still just set up right at resistance, looking for direction here, but overall another setup to play downside, especially if we do trigger more selling heading into next week. So overall, these inverse ETFs, again, they're showing volume again in their bases. They're quick ways to play stock market corrections, and if they do see heavy selling pressure, if the market does move higher next week, those are the type of indications that these things are then being unloaded once again, and they're just going to continue to move lower. But vice versa, big buying pressure would indicate these breakouts finally happening. So we'll see how the volume takes shape in these heading into next week as well. But they're set up to play a correction in the stock market at this point.